Thanks, Carl. So, in fact, if you be on mute, it will help me also to deliver, as well as it will help you also to understand what exactly I want to share here. So, Capital One, I was talking about Capital One, and Capital One in its inception itself, like within 10 years, it became top five leading banks in US, and especially in the credit card space. So, and that because of the power of analytics, power of all the data and how they are utilizing this data reporting and all. So card is a key factor, and analytics adds to card business. Loan is also there. Merchant acquiring, most of us will not be knowing about merchant acquiring, but merchant acquiring is all these POS terminals that you have or payment gateway whenever you do certain transactions, or various merchants that we have where all these POS machines are sitting. So these are payment solutions which different banks or sometimes fintech companies nowadays are also providing. So this is the merchant acquiring, and simultaneously it comes with the rewards and loyalty also, like whatever activities a bank customer is doing, this is the rewards and loyalty will be provided to them. And investment is certainly all this mutual fund, equity investment, everything. So in Fidelity Investment as well as a Standard Chartered Bank, I have worked into that. Geography wise, I have predominantly worked in US market, sometimes in Japan also for Citi, and Asia Pacific market, and a little bit of Gulf also while I was there in Standard Chartered. And now in last 3.5 years, completely I'm into Gulf region only in Kuwait. So then comes the statistical modeling, clustering, segmentation, all these things. So I have been exposed to do that through my study as well as during the work also. And then we move to all the product and campaign analytics. So campaign is a key concept for any bank or any organization, so that they can reach out to their customer, they can change the behavior of the customer. So this is really important, and especially understanding from beginning to end what exactly is done in campaigns. So we'll talk, I'll touch upon also in the subsequent slides. Then in terms of people, project and talent management, all these things I have been doing, and I like being mentor for especially young minds. And as I had been doing this career counseling, all those things in my past life, especially I started when I was in IIT, and then still I am doing. So this will be agenda for this last session, afternoon session. I will be talking about the basic structure of bank and why it becomes really important, and what exactly is a bank, what are the products we have, what's the balance
Hello,
sheet,
sir.
little bit very
So sorry to interrupt you.
yeah, yeah.
So I believe the presentation is not moving. So can you just check it from your end, sir?
Okay. Let me see, because from my side I have moved already. Possibly I will stop sharing and then again share again. Is that fine?
Yes, sir, that would be great.
Yeah. Share this one. Can you see, Carl, this agenda slide now?
Oh, yes, sir, it's visible now.
And I'm going back. So can you see I went back?
Not yet, sir.
So what I will do is I will just project whenever this I'm moving to the new slide. Okay, I will project and then confirm. Okay.
Sure, that would be great, sir.
Fine, right? Thanks. So I'm on this agenda slide, and we'll talk about the bank basic structure, then why bank, why it is needed, and most of us have dealt at least once in our lifetime till now about the bank, and different types of product, the balance sheet. Little bit I will touch upon the balance sheet. I know this is a topic to touch upon in accounting side. but I will touch upon that, and it's important for us to understand a little bit. Then how this banking space is right now, what are the new things which are coming up into it, the growth and all. And then we will move to evolution of analytics, and specifically why India has a very good edge in terms of the analytics. Okay. Then tools and technology, a value of data, and then tools of technology, and then two case studies I will be talking about, in which I have been personally involved in my previous experience. Okay, where I will talk about what exactly we did, and we have some optimization structure also, and through that structure we'll go through each of the case studies where we had application of some big data analytics, as well as the normal analytics that we do, and how we translate the analytical capabilities into solving a business problem. So you all are right now doing MBA or PGDM in big data analytics. And I'm sure that most of you will be going and joining some leading organization, either in banking space, healthcare space, or any other sectors also. And you will lead various teams, and you will lead various sectors into those companies. So it becomes really important for us that how analytics is going through the changes right now, as well as from bank perspective, what are the things that I can tell. And in last 20-25 minutes, we'll have some Q&A session also, so that if you have any questions, you can ask me, or you can put in chat. I will go through each one of the questions, and I will try my level best to answer everything on that. Okay. So I will, without any further delay, I'll move to the next slide. So Carl, can you see if I move this next to the next slide? Can you see the next slide?
No, sir, it's not visible yet.
Okay, so maybe it's a bit fast.
Yes, sir, it's visible now.
It's visible now?
Yes.
Okay, so this is the bank basic structure, and this slide, very superficially, I'm talking about what exactly is a bank. Okay, so as I mentioned, most of you have seen a bank, like in India, State Bank of India is the biggest bank. When I was in IIT, this was the first bank I encountered with. Means in my native place, I had Central Bank of India also, but my first account happened in the State Bank of India. So, and this was when I started studying. So every one of us, and I believe that 70% of all the audience is engineers here, almost, and rest 30% will be non-engineer, but various different background. So I'm sure they will be having a banking experience. So in a bank, one department called treasury, and this is a very key department. Why key? Because this is holding money, and this is the place where all the money circulation is happening for a bank. So this department takes money from the market, from different financial, non-financial institutions in the market, and then from the central bank also. So in case of India, RBI is the central bank, and different other countries, they have their own central bank. So they take money, they give money to them, and that's how they maintain the liquidity or the cash flow in each and every department of the bank, and that's how they create this banking book. And through this banking book, they serve different types of customers. So if this customer is a retail customer, then this portion of the banking book is called retail bank. If the customer is companies, or all those big corporate like big banks, or big small, even small companies also, then these are called corporate bank of the of that part. So suppose SBI is there, Citibank is there, they have their retail banking customers, and they have their corporate banking customer as well. And the point is, both are important. Retail banking talks about very large number of customers, but amount will be smaller, no doubt, average amount. Corporate banking customers, they are small in numbers, but of course the volume is much higher. And both are dependent on each other also. So one of the example I will give you, like corporate banking, suppose I have, look, so when I was in Fidelity, so Fidelity Investment doesn't have any banking services here. So any financial services in India. So what they used to do, they had given their, for all the employees, the salary account was there either in a Standard Chartered, ICICI Bank, or I think HDFC also, like 2, 3 banks they had given. So for Standard Chartered, it's a corporate relationship with Fidelity Investment. But when it comes to retail banking, all the employees, like more than 10,000 employees of that particular company, they were part of the retail banking for Standard Chartered. So that's how they are interdependent. When they start one relationship, they get another relationship also. And similarly, like suppose right now you are young minds having doing MBA in gym right now. After 2 years, you will join some bank or you will join some company at a good place at a high income. And some of you will be opening up your own company. So you will become the founder, CEO, CFOs, all those for your own company. So in both cases, you will need bank, and bank is important for starting a business. Bank is important for anything that you are doing in your life, where little bit money is important. So this is the biggest basic structure of the banking, and little bit I want to touch upon the transfer pricing. And transfer pricing is a very simple but very powerful concept. And it's not like it's not known to everyone. Everyone knows that. So suppose you are a shopkeeper, and if you want to sell milk, a packet of milk, 1 liter packet of milk, and if you have to, how you will earn money on that. So what you will do is you will get that packet of milk maybe at 55 rupees, and you will sell at 60 rupees or 58 rupees. So whatever the difference or this spread is there, 3% or 5%, this is how you will make money. So this is very simple, a simple concept, and means in several centuries people are using it. Like whatever the difference is there, that becomes the margin. This is the transfer pricing concept, and that's how even banks make money. So I move to the next slide. And in this slide, balance sheet. So Carl, please confirm if you can see this slide.
Yes, sir, it's visible now.
It's visible now. Okay, very good. So as I mentioned that a bigger portion of this you will learn in your MBA program might be, okay, like what is, and this is a concept of accounting, but this concept holds true everywhere. So suppose at your household level, means let me go at a very household level, where we have assets, we have liabilities, and we have shareholder equities. So what exactly is asset? So suppose your father is there, and father is having property, and he has a car, he has some more plots, he has some mutual fund, he has some cash in account or cash at home, all these things. These all are asset for your family. So cash, inventory, property, anything, or you have prepaid some of the amounts for future expenses. Those are also your assets. Your goodwill, everything, like because credit is really important for starting any activity. So if you have a goodwill from the for the bank, then it becomes really important. Like one of the criteria for understanding the goodwill in India is CIBIL score. Okay, through this, like this is a score which varies between 600 to 900. If you have higher score, then you are more credit worthy. So it talks about the goodwill of for you. Then comes the liabilities, whatever education loan, car loan, home loan, or any personal loan, all these things, these are liabilities for you. Whatever rent you are providing, you have to pay, these are liabilities for you. You have some workers working in your company or some person working in your household, all those, these are you have to give them paycheck. So these are the liabilities for your family. Okay, any utility bill, electricity bill, water bill, anything that you have pay is liability. Taxes, everything, loans, blah blah, everything is liability. So whatever remaining from asset minus liability, this is your shareholder equity, and these are the retained earnings which you will again invest for your company itself, which you will again invest for your household itself. So this is for a household, this is how the balance sheet looks like. It's also a simple formula, a simple concept, but in your accounting classes or courses, you will learn more and more about this and go much deeper. Okay. Now I'll move to the next slide. So Carl, please confirm if you can see this slide, bank balance sheet.
Sir, not yet, sir.
Not yet. Okay. So it's a bit far. It's coming from Kuwait. So it will might take some time, right?
Sure, sir.
Let me see if I can.
It's visible now, sir.
Visible now? Okay.
Yes, sir.
Very good. So usually in face-to-face presentations, you can gauge that, okay, whether the students or the audience is there listening and understanding and all, but in online space, this becomes really difficult. So Carl, you are my eyes now. So this is the
Definitely, sir.
bank balance sheet. Yeah, thank you. So this is the bank balance sheet we are talking about. So earlier we were talking balance sheet from a household perspective or any company perspective. For a bank, this is how a bank balance sheet looks like. So in earlier slide, loan was a liability for the household. Okay, because for loan you have to pay. But in case of bank, loan is a asset. And why is an asset? Because asset is anything which can get you liquid cash. Asset is anything. Liability is anything which will take cash from your pocket. Okay. So in case of bank, bank gives loan to its customers, either in form of in terms of the secure lending, secure loans like house loan, car loan, all those where we have a collateral against the loan, or unsecured lending where like we have this personal loans, or we have a credit card also, which is unsecured loan where we don't have anything backing. Like in case the person doesn't pay or is not able to pay, the bank will not be able to grab anything as a collateral. Or even the gold loan is a secured loan because gold is becomes the collateral. Okay. So loan is an asset for bank. Whatever deposits customers are keeping, these deposits are the liability for the bank. And liability because bank has to pay whenever the customer comes and says, boss, I want to withdraw my maybe 100,000 rupees. So that becomes liability for the bank because for customer it's an asset, but for bank it becomes a liability. Okay, and then deposit, I would say this is the cheapest form of capital for any bank, and they take money from customer, most of the time retail customers, individual customers, and then they give back this loan. So they will take maybe at a 4% from retail customers deposit, and they will give the 4% revenue. But when it comes to loan, they will charge 6%. So this is the spread here, like 6 minus 4 is 2%. This becomes the spread for the bank. And we have like a different cash instrument. So deposit held as RBI or central bank. Other financial institutions or cash where it will be part of the collection process for the bank, or different investment securities. So that several times banks, they invest their money into different parts, like different companies also they have invested. So these are the asset for the bank. Different real estate like bank premises, different equipments, all the computers, chairs, blah blah, everything. So I think Nishita Mehta is requesting something here. So Nishita, if you have any question, just put
No,
in.
sir, by mistake.
Okay.
No, sir, I by mistake clicked on the request. Sorry.
It's fine completely. So, and then we have different other assets, prepaid expenses. I said, like sometimes banks pay for future expenses. So these are also part of the asset. Okay. The liability side will be all the short-term, long-term debt, whatever deposits people have done with the bank. Okay, and these are there's different accrued expenses also. Like these will be you have to they have to pay rent also. Like different banks are working in some premises. Sometimes they have to pay rent in subsequent times. So these are also a liability. And then equity, we have common and preferred stocks, retained earning that will be there for reinvestment by the bank. Okay, so these all will be part of the equity. This is a very simple accounting principle. We will not go much details about that. Like all this discussion is another, I will say that another session it requires for equity, asset, liability, all this. Okay. So now I will move to the next slide. This is customer centricity. Carl, can you see this slide now?
It's not yet visible, sir. It just takes some time.
Okay. So what I would say that all this product offering that we saw in previous slide, loans, deposit, and some of the investment also. These are the product offering which were there maybe 100 years back also for banks, and they are right now also, and for sure they will be there in future also. So these are fundamental offering of in terms of the product for any bank. Okay, and these are the fundamental needs also. But what has happened in last several decades, I would say, like change in the need of the customer also. So Carl, can you see this slide now?
It's not yet visible, sir.
Me.
Yes, sir. It's come. It's come now.
So I was talking about the customer need. So in last several decades, the need of the customer has changed, and it's changing a lot. So suppose you as an individual, you started working in a company. So maybe you will work for 5, 10 years, 15 years. Okay, so at that time you will need or when you are starting, at least you will need a bank account or salary account specifically. Then once your salary account is there, you will need a credit card also, you will need debit card also, because you started having money flowing into that account. So you will need to enjoy that also. Like you have to transfer to your parents, you have to pay for some bills, or maybe you have to go into restaurants or travel, all those things. So customer need has changed. Maybe after 5, 10 years, you will say that, okay, enough doing job. Now let me start my own company. Or maybe you can start as of now also, okay, let's start my own company. So in that case, what you will do, okay, you will say that, okay, this salary account is not required anymore. I need salary account for my staff now. Okay, so I need an account, current account, through which I can disburse salaries for my staff, so who will be working in your company. So the need becomes different for you now. So depending upon the requirement, depending upon what exactly you are working on, and since money is involved in each and every activity nowadays, except very few, but each and every activity, you want to travel abroad, you want to travel outside your city, you need money. You want to go and eat in the restaurants, you need money. You want to apply for a visa, or you want to apply for any certain activity, you will need money. So these applications is getting reflected into banks also, bank space also. And then comes the convenience factor. So earlier, for any money withdrawal, possibly person has to go in person, and then they will fill some form, and then they will go into bank and say that, boss, I need this money. Then you will wait for a couple of hours, and then you say that, okay, now I receive my money. So after 2, 3 hours. But as of now, you really don't care to go to bank. When I was there, like 10 years back, I was in almost in city. At that time, I stayed more than 5 years in city, but I didn't require to go bank in that 5 years. Everything was doing online. So this is the convenience that I'm talking about. Or you need to go outside, you are traveling outside, you need foreign exchange. You don't have to carry foreign currency from India. You take a prepaid card or you have a credit card or debit card, you go there and just withdraw money from the ATM, any ATM in that country. So this kind of convenience is required for the customer. Okay. Then the information churn which is happening right now, the information churn either through social media, internet, like booming internet, I would say, information is at the tip of the customer. If you need to apply for a loan, maybe 10-15 years back, people used to go for application of loan. Once they go into bank and they understand the product and all, or they call somebody, they understand the product for different banks. As of now, I don't have to go to a bank. I just go to Google and then I start looking for, okay, what kind of companies are there, banks are there which are giving offering loans for individual customers, or maybe if you are looking for corporate loan, that also, and you can compare everything over there. So this kind of information churn is there. So needs are changing. You customers are having lesser time, so they need convenient also. Lot of information is flowing into social media, internet, and everywhere. So all those things has impacted banks also. So the operation for banks has become much more complex, much more complex. So we will talk about in the subsequent slide about it. Okay, and customer centricity, this is a very important aspect. So like 10 years back when we were looking at the customer, we were looking at the product perspective. Like, okay, I'm a product head for credit card, I will sell credit card for that same customer. Then loan head comes and say that, okay, I'm product manager for loan, I will sell loan to the same customer. Then investment, and then different products. But customer, they will say that, okay, boss, you all are in bank for me, whatever bank. So suppose I'm talking about Citibank, so you all are Citibank for me. I don't care whether you are a credit card head, loan head, or a investment head. You are all Citibank for me. So in that case, you all see me as one. So as of now, I need a loan. I don't need an investment product. As of now, I need an investment product. I don't need a loan. So in that way, customers started talking. So then comes the customer centricity. You keep customer in the center, and all your operations, all your activities, all your targeting campaigns, everything should revolve around customer. So that's why we say that customer centricity is really important from that time onwards. And it's a simple thing, like why I should hover around the customer and talk about from different angles, because for customer it's a bank, irrespective of whosoever is talking. So we should talk about customer, their needs, keeping them at a center, not banking their needs. And this is a really important, and banking is all about relationship. This is all about trust. So trust building is really important, and that will happen one person or one representative talks to the particular bank for all the needs of particular customer. So I have moved the slide to the eighth slide. Carl, can you see now?
Not yet, sir.
And how is the speed? Means do I need to slow down or go a bit fast? It's fine.
I believe it's fine, sir.
Fine. Okay. So if any of you feel like that I should go slow, let me know. I will be slow. Okay. Can you see now?
Not yet, sir. Still on the previous slide.
It will come. So we were talking about this different product and offering, and as needs are changing, this old bank becomes a new bank, and today's bank will become old tomorrow, and then again new products and offerings will come. So earlier through checks or through demand drafts, we were withdrawing cash. Now we have different ATM machines through which we are withdrawing cash. Now we have kiosk, online banking, mobile banking, payment agent, chatbot through which we are interacting with different customers, like as a bank. Then we have different teller machines, we have different payment, insurance, everything is there, like digital banking platform, and this is the future, I would say, digital banking platform. And at current also, we are seeing the same. Okay. Carl, can you see the slide now?
No, sir, it's still not visible.
Stop sharing and then I will share again.
Yes, sir, I believe that would help.
Can you see now?
Yes, sir, it's visible now.
Very good. So this is I was talking about, like needs are changing. Like specifically, if I talk about core banking system, 10 years back, 15 years back, if you are a bank customer in Goa, or suppose a State Bank of India in Goa, and when you are going to Mumbai or you are going to your native place or any other city in India, then the core banking system was not there. So now all the branches in the same bank group, they are connected, and whatever operation, especially the basic operation you want to do, you can do in any branch. So this is a very good convenience provided by a core banking system to all of its customers. We have deposit machine also, which are called IDMs, through which customers can deposit their cash into the ATM itself, in the machine itself. They don't have to go to bank anymore. We have various switches, financial switches we have, through which one customer is transferring their money from bank A to bank B to bank C, or to different other clients also. So suppose you are owning a company. So for running these operations in your company, you have to pay to your clients also. So through these financial switches, you are paying through. Similarly, for credit card payment, so you have a credit card for bank A, but through bank B you are paying. So all these things are really possible, because through needs, customer needs, banks are also changing. Banks are also bringing in new things into place, and maybe in future you might not need a bank also, like brick and mortar banking. You might not need. You might not need a cash also. All these bitcoins, Ripple, everything which is coming now, maybe you will not need a bank anymore. So what I am saying is, here needs are outgrowing, changing a lot for customers, and that's where banks are also, or not only banks, other organizations also are changing, so that they can keep up the pace. So next one, so I just moved this slide to the next slide. So this is, I think, slide number 10, and so here when needs are changing.
It's not visible yet, sir.
Yeah, it will come. Don't worry. Maybe another 30 second or 15 second it will come, Carl. Till that time,
Okay.
possibly I can talk. So when things are changing this fast, and customers, being retail customer or corporate customers, they need to be in touch with their bank, because it's about money, and money is really important. So for running anything, for running a household, running a company, running anything, like money is important. So they need to be in touch with their banking system, bank provider or money provider, account provider, whatever you say. So there you are touching, and the bank is touching with their customers through various channels. So this is we called omni-channel experience for a customer. Okay. Carl, can you see it now? Not yet.
Not yet, sir.
So
So I believe there is a question that has been asked by one of the student. So would you be able to take it now, or would you be taking it at the end of the session?
and I think you can shoot. If somebody is asking.
Yes, so Gaurav, can you go ahead and ask your question?
Uh, Sir, I'm not sure if I'm wording it right. So, because you said it's customer centric or consumer centric. So, as a data analyst, scientist, or whatever part, whatever your position in the banking industry is, so would you say that's the you should look that as a primary purpose instead of, because there's a lot of technology also. That's how you should look at things instead of just with technology. Like you talked about the apps and all. I'm not sure if that is the correct wording or if my point is getting across.
So, Gaurav, let
Yeah.
me rephrase the question that you asked, that all
Uh-huh.
these things that we are talking about customer centricity perspective, and we have various channels and on how data analytics will come into the picture, right? Because till now, I haven't spoken about data analytics.
Okay.
Okay.
So I was
So,
expecting like we'll discuss this in the end, so it came into it. That's why I put it in the chat. So if it
right.
you explain it during the presentation, that's fine by me. Thank you.
Yeah. So it will be presented, and in fact, this is the last slide. Through after that, I will talk about more into data analytics, especially the big data analytics, also some of the concepts. So
Sure, sir.
why this slide is important? Can you see this omni-channel banking platform now?
Yes, sir.
Okay. So why this slide is really important, and this talks about the transition between the business side and to the analytics side, especially the data analytics. And so all these touch points where you have like call centers, you have video tellers, you have messenger chatbots, social media interaction, ATMs, branches, mobile, web application, email you are sending. All these channels are creating touch points for a bank. Okay, and when they are creating touch point for the bank, it is creating data also. So earlier the data means like, okay, you go to the bank, you withdraw cash, and then you sit at home and you don't go to bank for maybe another 1 month. But nowadays it's not like that. Everything, every activity, even you are calling to the customer care, you are sending an email to customer care, these all are generating some data. You are doing transactional product. Earlier, like you withdraw cash, and with that cash, what exactly you are doing, bank doesn't know. But when you are using cards, like debit card, credit card, or prepaid card, banks know exactly what you are doing, where you are transacting. So every day they are knowing that, okay, suppose you went to restaurant, certain restaurant, KFC, then bank knows that you went to KFC 5 times in this month. Okay, but you don't go to a certain type of restaurant, or you are a certain profile of the customer, like you are more on travel oriented, because your most of the spend is happening on travel portals, or you are more on e-commerce spender. So all this is generating data through which we are profiling. We are trying to understand what exactly you are doing or what exactly you are going to do. So that is coming from the data analytics itself. So whatever data is getting generated, which we discussed like previous slide also, and this omni-channel banking experience also for the customers, this everything is generating data. All the mobile applications where you are hovering your mouse, suppose you are on account online, that is also becomes really crucial for us. How much time you are spending on a certain web page on the banking website, that becomes really crucial, and that talks about, like boss Gaurav has gone through this bank website and hovered around loan, so possibly he is looking more for loan. In fact, he has searched in his social media also platform like about credit card, so he's more about credit cards also, or he is looking towards certain other product, so possibly we can help, or certain experience that he wants. Okay, he wants to go for some maybe wine testing, so he's looking for avenues for wine testing. So since Gaurav is already a very good credit card customer, why don't we offer him one? And he has been doing a lot of transactions, and he's searching about wine testing. Let's give him an opportunity through his different reward points itself. Let's give an opportunity. So all these things we are able to do only through data analytics. Okay, So omni-channel experience, product understanding, everything. So if you allow me to move to the next slide. So this slide, I'm just starting. Maybe once it comes, then you will see that India is leading into data analytics, and specifically the big data analytics. And why India has edge, and Indians who are studying there in different universities or schools, they have this edge towards data analytics because of the software industry. I think in 90s, we started with software energy where all this Infosys, TCS, Wipro, all these companies, they started booming in, and we had very good understanding of IT. So we knew exactly what exactly softwares are, what we are building, and that's how we led into software era into for the whole world. Now from software, it came to data, because any activity you are generating, you are creating this data, and you are storing this data into databases. So database management comes into the picture. But data is useless if you are not using that particular information, because through churning this data itself, you will understand something, what exactly is happening. So you start creating some reports, what exactly is happening in terms of the trend, who are these customers, what kind of the whole portfolio looks like. So very basic reporting, I would say. And this in companies, we say that this is an MIS work. So where you are just reporting what exactly has happened. You have not done anything. So very superficially. So Carl, can you see this slide now?
Not yet, sir.
Okay. Here once more.
Now we can see, sir.
It's visible now, sir.
Okay.
Okay. At least can you see now?
Yes, sir.
Evolution of data analytics. Okay, so I was talking about that software. India has leading edge in IT. Then it goes to database, and from database it goes to reporting. In reporting side, we start with so earlier Excel was the biggest tool for reporting, and in a spreadsheet itself we were reporting things. But nowadays, even for reporting, different visualization tools are available, like either in SAS visual analytics, or Tableau, or any different softwares we have. Then we move to analytics, where we wanted to understand deeply that what exactly has happened, who are the customer who are applying for this product, or if we are sending any campaign, that which kind of customers are trying to reach out or respond to that particular campaign. So all these are coming into analytics, and then comes to the big data analytics, which you all are part of it. And this big data means I don't have to tell what exactly is big data. And big data, we have all the V's of big data also. Like initially started with first three, volume, like gigabyte becomes gigabyte, and yottabyte, all those things. Then velocity, like real-time data streaming has started happening. So velocity of the data is increasing a lot. So to my example, when we were withdrawing cash once in a month and then spending, there was not much data for your spending pattern. But when you are doing this through your credit card, then the velocity of the data started coming into picture. So instead of monthly, now we have maybe hourly or maybe minute level data we started receiving. And in some cases now it's second or millisecond now also. Then variety of the data, like lot of unstructured data started coming. You are not only interacting with customer on phone or face to face, but on SMS itself you are interacting. You are interacting on the social media web pages also. You are interacting through email, different channels. So all sort of data now it's coming. Then even though, and then comes the variability. The variability is same data, but it varies. So for an example, suppose you are drinking tea into your canteen. Same person is making tea, all the ingredients are same, but when you drink tea today and when you drink tea after maybe 2-3 days, both may taste different also. So same data varies also. So this is what my point is. Then veracity is coming, where you have to put in place the system so that whatever data is coming, this is accurate also, because there are so many times the noise is there. So veracity comes into the picture. Then visualization, whatever you have understood, you have to convey for the inference perspective. Then comes to the value. Any data, anything is useless if you are not creating a business impact. And specifically when you are doing management MBA, then you will understand more and more. Any activity you are doing, any very small or very big activity, if it doesn't have any business impact, useless for everyone, for the business. So this is what we ask in every presentation to our associates, that was whatever you are presenting, what exactly bank will benefit from. Okay, so it's good if you inculcate this habit that whatever we are doing, if it is creating value, then it's impactful. If it is not creating value, then it's useful. If you are in academics, it's good that you are going through different algorithms and creating big data algorithm and all everything. But when you come to corporate, even this big data reporting, analysis, or any model building exercise, anything you are doing to create impact on the business. You are not doing this just for the sake of learning. So this becomes really important. Now, I'm moving to the next slide. Maybe for the interest of time, I will just stop sharing and then share it again. Stop sharing. This one. Can you see now value of data with time?
Yes, sir.
So this is an important slide, and when whatever data is coming into picture, every data has an age, and it's not like that value of any data is diminishes with time, but the type of activity that you will be doing with data changes over the time. So on my y-axis, it is the value of the data. On my x-axis is the time, how it is moving. So age of the data, you can say that. Initially, it becomes very interactive in terms of data. Like in milliseconds, you have to place the trade. In millisecond, you have to approve a transaction done on a credit card. So if you go and transact on a credit card in millisecond through Visa network or Master network, and talking to the issuer, the bank card which is you are owning, all this transaction happens in milliseconds and sometimes nanoseconds itself. Sometimes it takes more than a minute maybe, so that they can prevent the fraudulent transactions. So this data is really key for interaction also. Okay, then comes little bit more, maybe you come into seconds. So these are the minimum one, but it can vary as the time progresses also. Then here you will be doing the real time analytics. One of the examples that we have worked upon is you are passing upon in a mall. You are just roaming around in a mall. In mall we have 100 different types of shops. So suppose you are passing through, I will again go to KFC, and through mobile application we know that, okay boss, you are passing through KFC. How can you put a notification in your mobile that in KFC our bank is giving 10% cashback? So if you are going with your friends or family, then you will see that, oh, I have 10% cashback in KFC. Let's go to KFC. So this is the power of data and doing analytics with them. So we can create several models also into that. So I have one small case study also, which I will talk about, that how the data analytics helps to do some functions in the bank. Then once it progresses, it becomes record lookup. So you can see that, okay, what has happened to that customer? If some customer calls us and they says that I see some 100 rupees transaction which has happened on my card, which is not correct. So then you can look up into that record lookup and say that, okay, this is the transaction, boss, you have done into this particular merchant. So that's why this transaction. So just for record lookup. Then comes the historical analytics. data ages, but its value changes now. So all sort of whatever the analytics that you are doing, you are building predictive models, you are building segmentation, clustering, and everything, like all the trend analysis that you will be doing now, like historical analytics, exploratory analytics that you are doing. Okay, so this is where you will create lot of algos using a statistical tools. So very superficially, I'll talk about some tools also and all. Okay, so value of data never diminishes. Only thing is the mode of application or mode of usage of that data changes with time. Now I will move to the next slide. So especially from the banking perspective, this is really important because trust and relationships are coming into the picture. As a customer, they are giving their money, or they are taking their money, or they are giving a lot of transaction details to the bank, and bank has all sort of data here. Okay. So Carl, can you see this slide?
No, sir.
Okay, it will come maybe. So I would say that the customer data remains very crucial for banks. Okay, so that's why we are very finicky. All the banks are very finicky, or any investment or any financial institutions, they are very finicky about that customer data should not go out of their premises. So a lot of trainings are given, and that's why we don't go for open source tools like R, Python, and all. Okay, so we go for SAS. Basically, SAS is really important, or maybe some big data tools that we encounter, which are paid ones, so that tomorrow anything happens in terms of the data security and all, at least we have some place where we can ask what exactly has happened, all those things. Okay. So this is the reason that we don't go for open source. For open source, for some analysis and all, people use, like in different banks I have worked on. I have worked in R also, so we use that. But most of the time they use SAS, and they use some paid softwares also, only tools and technology. Technology side, like a lot of statistical modeling and clustering techniques that are already visible, that will be used. Okay, can you see now, Carl? Not yet?
No, sir. Not yet visible.
Share this one. Okay. Slides. Okay.
It's visible now, sir.
Okay, thank you. So here I would say that learn MS Office. Deliberately, I have not kept MS Office here, but all the activities that you are doing, is ultimately goes to what inference you are withdrawing from that particular data analysis, or what exactly the business impact, and all those impacts are shown either in Excel charts or in PPT or in document MS Doc. So MS Office becomes really important if you want to survive in your MBA, as well as in your corporate world also. And these are really wonderful tools created by Microsoft. So I would suggest invest some time to learn SAS, invest some time to learn Excel and all the MS Office applications. Now I will move towards a very key concept. Maybe I would, in the interest of time, I'll just stop sharing and then keep sharing like that. So this is a key concept, like key performance indicator, and almost we are at the last stage of our presentation. So their objectives, their measurement, optimization, strategy, performance, and evaluation. So this not only in companies, but in your own life itself, you can apply any activity that you are doing. You are learning guitar, you are playing cricket, or you are going for a drama, or you are learning swimming, anything, any activity, you can put this KPI, key performance indicators. And hopefully in MBAs also they teach this. Like you start with an objective, and this objective, it must be very well defined, and we give lot of time to understand the objective. Any activities or any project, any request that comes to us, we give some time to understand the objective, what exactly business wants to achieve. Then we go for the measurement, like what are the different parameters which will be measured, so that it will say that this objective has been fulfilled or achieved or not. Then we optimize what exactly are the steps we have which needs to be optimized. Specifically, when it comes to optimization, we are working in a constrained environment. So in mathematics, we have constrained optimization problem where you have to maximize maybe revenue, maybe profit at a constraint of something. So we have, suppose $100,000 has been given to us and said that, okay, with this $100,000, let's make $1 million or $2 million. So that's how we run some campaigns and create the value through optimization. We build a lot of strategies, and in this strategy can be marketing strategy, what kind of population we have to target, what kind of offers we have to target, all those things. And we keep tracking the performance also through the measurement, the second point that we talked about. So, and then last, we evaluate what activity, what we were doing, have we succeeded, not succeeded, any refinement was required or not required. Okay. Now I move to the first case study, and like I have two case studies to talk about, which are quite live, we have worked upon. Okay, so I'll just stop here and then share it again. Okay, resume slideshow. Okay, so this is the first case study where like a CEO of our bank, he came to us and asked that, okay, boss, the market is growing by 10% in terms of the credit card usage, but we want to increase by 15%. So these all like parameters, or these all targets come, even CEO received from various stakeholders like board of directors and all. And then the CEO assigned this to us. Okay, boss, increase this card usage by 15%. So this was the simple business objective. Market is growing by 10%. We have to grow by 15%. Then comes to the analytical objective. Like what are the different avenues, opportunities where we can increase the credit card usage. Okay, and for increasing this credit card usage, we have to change the behavior of the customer, and changing the behavior of the customer, it requires a campaign exercise. We have to build a campaign here. Okay, so what we started doing this, we first try to understand, and this is like when they said about 15%, this is at least 3-4 months earlier. So in September, October, we start creating the budget for the next year. So this activity we had around 3 to 4 months to implement. So what we started doing this, we created some persona based, as well as simultaneously we created opportunity pool for the customers. So if I have credit card usage, I have to increase, then I have to find which are the customers which are doing a lot of ATM transactions. So ATM transactions, when they are withdrawing cash and then they are just using the cash. Possibly these cash can be used at a credit card also, or a debit card also, and a prepaid card also. So what came to us, the first thing is find the opportunity in terms of the debit card usage. The second thing is, like, we have to find the persona of the customer. So like if a customer 1 is there, he or she is more inclined toward doing a spend related to retail shopping. Person B is there, who is more inclined towards doing spend related to travel. So this person is more going out of the country or out of the city and doing a spend on his card or credit, any type of card. Or this person is more about saving, or this person is more about like lifestyle, young lifestyle kind of transactions. So what we did, we created a couple of models. So one model is who are these customers and whether they have propensity to transfer this ATM usage to card usage, credit card usage. This is the one. Okay, so that we can migrate this debit or ATM usage towards the credit card usage. That is the first. Second thing is we created clusters also, and we used statistical clusters, and we created persona for the for all the customer and divided like 6-7 personas, and we say that was these are the customers who are more likely to transfer their ATM usage into credit card, and out of this pool of the customers, these are the customers if we give restaurant related offers, or if we give travel related offers, then they will move their spend into travel categories. So whatever spend they are doing, they will move to credit card. So this becomes the like modeling as well as clustering we did, and lot of analysis also we did, and we created analytical objective and we tried to fulfill that. Then we had come to measurement whether this campaign is successful or not. So A/B testing we did. Like, and A/B testing is like you have two offers, offer A and offer B or offer C, and out of these 2-3 offers, we want to test which work better. Or you have multiple channels, like 2-3 channels you are testing to communicate with the customer. Then you are doing all this testing. Then a concept called champion versus challenger concept comes up. So after doing all these A/B testing, what we know that okay, this offer A is the champion which works best. Okay, so we use this offer for maybe 5-6 months, but after that we try to challenge it. So till now you were the champion, now I'm coming as a challenger. So for an example, in 1983 West Indies in Cricket World Cup, they were the champion in last 2 World Cups, but India in 1983 India came as a challenger. Okay, because nobody was knowing that okay, India is going to win, but they challenged West Indies and they won the World Cup. So this is the concept of champion versus challenger, and this is there for channels, this is there for offers, this is there for creatives, like what kind of messaging that you are sending. One messaging can be dear sir, or one messaging can be hi sir, or one messaging can be dear Carl or hi Carl, in that way. So all this testing we measure there, and of course it's a constraint optimization, because for maximizing usage to reach 15% of the card usage, the growth 15%, we need to have the pool of money, and this pool of money was limited. So this is a constraint optimization problem for us. Then we have lot of strategy, channel, segment, marketing, collateral, communication, everything. Okay. And the performance was the success factor of the performance for the campaign was the card usage increased by 15% or not. And then we had a lot of evaluation also, whether campaign worked or not, and possible refinement is required for subsequent run of the campaigns also. So what I see now is we are already 1 hour and 8 minutes. Okay, and I have some time, I think 10 minutes time, Carl, right? So I would not go to the second case study that I had created, but I will directly go to the question and answers for all the audience that they have.
Sure, sir. So I would request if anyone has any questions, they can raise their hands. So I have many hands raised. So Adonis can go first.
Yes, sir. Hello, sir. Good afternoon. You have told us about retail banking and corporate banking. I would like to know more about developmental bank, like SoftBank, World Bank, Exim banks. So how data analytics is being used to make the decisions whether the bank is going to finance a particular project or not. And because they don't have any omni-channel banking platform like other banks. So how do they do it?
So I think it's a very good question. I didn't get your name.
So my name is Adonis, sir.
Adonis.
Yes,
So yes, Adonis, this is a very good question. Like when it comes to data analytics, there are several levels of analytics that we do. and data can come from different streams. So what we have talked about, the case study I have talked about, this is an internal data for the customer that we already know. Then comes the market data, like different economies are there. So like different development banks, Asia Development Bank is there, World Bank is there. What they do is different indicators for that particular country, suppose. Okay, then they have CSO data, like all the statistical offices data is there for the citizens. Okay, which governments and different NGOs they are collecting time to time. Second thing is they work on the sample based data. So what they do is they go to a certain geography and sample level they get their own data, they interview with them, the primary research or secondary research, all this type of data comes into the picture. The analytics remains similar, I would say. Only thing is the volume of the data becomes smaller in those cases. When you are talking about sample, like when we talk about internal data, it's a million of rows or sometimes several million, like 20, 25 million of rows, or maybe more than that, 100 million rows we are talking about. But when it comes to like summarize citizens data or a certain small geography level data, then it becomes smaller. So you do these analytics into, maybe instead of SAS, you will move to SPSS. Instead of like big data analytics tool, you will move maybe in Excel itself. Okay, but the intent of doing the same remains same. The only thing is tool changes. The intent remains same. What you do is you have to identify opportunity, like, okay, this is the area where some scarcity of water is going to be there. Okay, so this area we have to focus more on bringing some like logistic support from bringing water and all. Some farmer related issues might come. So all these things, the ADB or development banks, they support once they learn from there. Hopefully, I.
Yes, sir. Thank you.
Made clear. Welcome.
Yes, sir. So we have another question from Somnath. So Somnath, you can go ahead.
Yeah. Hi, sir. Somnath here. Sir, I have read about the blockchain technology. So I want to know that how can the blockchain technology help the banking sector? Like it is helpful in encrypting the data. So is it possible in the future that it will help in securing the bank better for the security purpose?
Very good question, Somnath, I would say. And blockchain is a upcoming technology, and blockchain is not only in banking, but in almost every walks of life, you can have application. And in fact, I know Indian government also, they have started applying blockchain also in some of their initiatives. In case of bank, what I would say, so you know blockchain, so you have a chain and then just in front of that particular link, you have another link and then another link and another link. Okay, so the concept of blockchain is authorization also, where the authorization is done not by one party or two party, but everybody who is involved into that particular blockchain ecosystem, I would say. So one of the application I would say is the payments that we do and fraudulent transactions and all that we all can I would say rectify using application of the blockchain. So whenever a new link gets created in blockchain, what it does is it verifies from different sources. So suppose they have 50 people in that particular chain, then one person, like suppose Somnath created a chain, one payment has happened. Okay, so rest of the 49, they verify that okay, this particular payment has happened from Somnath's account only, not from any other account, and it goes to certain account. So just like we have this concept in data structure also, like you have a tail, you have a head or pointer also in different Java or C++ also. Blockchain also, every block comes with a header, tail, and some more information guidelines. Okay, so it will help in streamlining all the payment also, and it will create a ledger, like whatever ledger we have heard about in last 10, 15 years or 20 years. This ledger based technology also will help, will get help from this blockchain technology. But I would say that blockchain is is a really, it's another subject that we can talk about, and it will not be, I cannot justify in 1 minute or 2 minutes regarding this. But it's a certainly good question, Somnath.
We have another question from Satyaki.
Yes, sir. First of all, thank you, sir, for your beautiful presentations. We have some good insights from your presentation. So, but my question is that so far we have learned from this presentation that data analytics, banking are using data analytics based on customer preferences or mainly. Okay, but my question is, can it be used for solving the challenges that India is facing currently in banking industry, like NPA problem, bad loans problem, etc.? So how data analytics actually help to solve this type of problem if in India?
Thanks, Karthiki. I think this is another good question that you have asked, and it takes me back to like 6-7 years back. We in statistics there is a concept called survival analysis. Okay, when you talk about the NPA is what means bad loan. You company has given loan to somebody or bank has given loan to somebody and this person defaulted. So suppose Sarthaki has taken 1 crore as a loan to start his company and but couldn't pay and he doesn't want to pay. So through data analytics in statistics, it is something called survival analysis, and we created a model also, which will predict that this person is going to default after 6 months. So this person right now he's paying or his payment patterns, everything. So depend using the history, what we identify that this person is going to default after 6 months. Default, yani he will stop paying also. Okay, so this is what means default. He becomes delinquent, he stopped paying. So this is where we intervene, like 6 months if I know upfront, 6 months or 3 months upfront, if I know that this person is going to stop paying the loan or go delinquent, then we intervene from the bank side itself. We started looking into their asset profile and everything, and we started reaching out proactively from our side. So this is where data analytics helps us. We create a statistical model and identify that particular event, that particular activity this customer is going to do. Okay.
Okay, sir. Thank you.
So we do not have, I do not see any other hands raised. So I would request students if they have any other questions.
Ritika or I forgot her name also. Somebody else has raised the hand.
Yeah, sir, Ritik. So my question was the same thing about NPAs and default rate increasing and how does analytics come into picture? Since I've already answered it, so I.
Welcome, Ritik.
Yeah.
So you all are at home right now or in gym currently?
Home, sir. Home.
The best part. So any other questions from your side? Fine, right? So thanks, Jim.
Yes, sir.
Thanks,
I
Carl.
believe
And
that is.
I would say that thanks to Professor Neeraj and Professor Alec who provided this wonderful opportunity. Thanks to you, Carl, for smoothly running this presentation webinar, I would say, and to all the participants who have given their time. And I'm really enthralled to hear you all and share my experiences. So in future also, I would love to mentor, guide, or counsel anything that you feel like, and it's my pleasure. Thank you all.
Thank you so much, sir. Thank you so much for spending your valuable time with us on this afternoon. Thank you so much. And on behalf of the entire BDA fraternity of GIM, I would like to thank you as well, sir. Thank you so much.
Thank you, sir.